Hello, good afternoon. You're watching Your Stocks on CNBC-TV18. I'm Vinny Motiwala. And let's look at the market, what it's been doing. Not much of an excitement that we've seen coming in on the D Street today. Nifty quite flattish as of now, trying to make a bit of a comeback, but down almost 0.06%. So that's almost 14 points down in trade. Sensex 2 is trading quite subdued. A slight bit of a positive uptick, at least right now, is what the Sensex is holding on to. Up almost 18 points in trade. Mid and small cap, the broader markets, that's where we are seeing a lot of pressure coming in, a bit of a selling pressure today in the mid and small cap names. So yes, keeping an eye on that. Specifically, mid cap is down almost 0.3% in trade. Small cap also trading with sharper cuts that we're seeing coming in. Small cap also is trading with 0.3%, and mid cap is down almost 0.2% to 0.3%. So yes, that's how the market is shaping up like. PSU Bank especially seeing a sharper fall today in trade as well. So PSU Bank, among that we have seen PNB, IOB, Maharashtra Bank. Those are the names that are falling in trade. Media today managing to hold on to some bit of a gain, and Nifty Media is among the top sectoral gainers. So yes, broader markets clearly under pressure. Not much of a participation coming in from IT, PSU banks or the FMCG pack. Only media energy is something that we're managing to see some bit of a green. But today we do have our guest joining in with us to solve all your stock related queries. We do have Rajat Bose joining in with us, as well as Sharad Avasthi joining in with us this afternoon. Good afternoon, gentlemen, and thank you so much for joining in with us. I'm going to start with the first query for today. We have DP Gupta, who's writing to us from New Delhi. This one is on Tata Motors, holding 100 shares at a price of 1,160 rupees per share. So some bit of a loss is what they're making. Currently, Tata Motors trading at 962 rupees per share. He wants to know whether he should continue to hold this or sell. I'm going to come to you, Rajat. What's your view on this one, on the technicals? Is it interesting, or maybe someone should start booking out some bit of a profit?
No, I suppose that Tata Motors continues to show weakness. In fact, there is a bearish crossover between 20-day and 50-day moving averages. That has happened today itself. So chances are that you might see it testing the 200-day exponential moving average, which is currently around 935. So that is a possibility. So immediately, I would not say that one should buy, or one, if one wants to see whether it stops falling at 200-day moving average, then one can continue to hold. Otherwise, one may get out of.
Okay, that's your view coming in there on Tata Motors. But Sharad, I want your view also, because fundamentally right now for passenger vehicles, we have seen a lot of these global OEMs actually cut guidances, so we are expecting some bit of that impact coming in terms of demand trends. Fundamentally, would you still look at Tata Motors, or would there be any other bet coming in on the auto side?
We have been bullish on Tata Motors for quite some time now, but I think at current valuations, the one hope thing that the investor can play around with is probably in terms of pure valuations. The rest of the pack trades at 18-20 times 1 year forward. Tata trades at 11-12 times 1 year forward. But the only difference is that major part of Tata Motors earnings comes from JLR, and the premium side of the market does not get higher valuations internationally also. As you rightly pointed out, some of the larger premium vehicle makers have already pointed out to some kind of slowdown there. And even though the electric and the CV and the passenger vehicle part, the domestic business should do very well, there is very good traction there. I think in the long term, that will start contributing to numbers, but over the next 1.5 years, it may not be a major contributor. So I think the best hope for you would be that, normal retail participation does spark it up, and people expect these valuations to catch up a bit, vis-a-vis, the larger names. Without going too much into details. But if you look at detailed valuation, I think since majority of the earnings comes from JLR, there could be an impending China slowdown in spite of all the effects. And if that space does not grow at a very healthy rate, the probability of Tata Motors getting re-rated does seem like remote. So expect market-linked returns. I think 10-15% kind of upside you can expect. If that does materialize, you should try to get out. Yeah, I think that would be the fair strategy to have.
Sure, okay, keeping an eye on that strategy for Tata Motors. Let's move on to the next query. This is coming in from public sector side, and we have Prakash, who's writing to us from Mumbai. He's holding 200 shares of Bharat Electronics, bought at a price of 332 rupees per share. This is a bit of a long-term query, so I'm going to come to you, Sharad. They want to know in terms of the future of the stock, the outlook of the stock. The defense sector has already seen such a big run-up. So what is it that, on the fundamentals that is looking attractive there? And should they continue to look at the stock?
Yeah, I think for most defense stories, if you have a horizon of, extendable up to, 5 to 6 years from now, I think most of the defense stocks will be like, even doublers from current valuations. But if you have a shorter time horizon, maybe 1 or 2 years, then most probably BEL might not be the best bet you want to stay into because earnings right now is expected to grow at 17-18%. Even if we consider, that there is some acceleration by FY26 and you have much better earnings, and it does report an EPS of somewhere around, say, 9 or 10, even then it's trading at 29-30 times. I don't think it leaves much on the table. But yeah, if you can wait long term, if you can extend your horizon to 5 to 6 years, I think the whole defense pack is a space to watch out for. There could be very strong re-ratings. The order books have doubled over the last 1.5 years in most of the cases. And I think the order book could swell further over the next 2 to 3 years. But might not be linear in nature. The projects could have long gestations. You could have some disappointments on the way. So I think if you can extend your horizon, continue to hold it. I think it's in the long term, 5 to 6 years, it's an excellent bet. I think even if you consider conservatively, these stocks can double within that time frame. But if you have a shorter time horizon, 1.5, 2 years, I think again,
Right.
30 times 2 year forward, it's roughly priced to perfection, not much left on the table.
Not much left on the table for the short term, but long term you're expecting to double in terms of the move that one could expect. But in the last 1 year only, when you're looking at the chart, Rajat, the BEL as a stock has doubled in this just last 1 year. On the technicals also, would you concur with the view that Sharad was talking about in terms of long term, yes, but short term maybe something that one should avoid?
This stock has actually moved up. Last year, November, it was around 120, between 120 and 130. From there, it tasted 330 kind of levels. After that, this is the correction that is happening. Over the last 4 or 5 sessions, or rather 4 sessions, including today's, it is moving up. But it is now testing the 50-day moving average, which is currently around, say, 292. If it manages to get past that, then there would be any short-term move further up. Otherwise, you expect it to test its 200-day exponential moving average around 249. If one is not having a long-term horizon, I would say it is better to book profits, get out of it, or if you are planning to buy a fresh, wait for the 200-day to be tested. Around that time, you can buy.
Okay. That's a view coming in from you as well on BEL. But let's move on to the next query. And this query is coming in from Indira, who's writing to us from Visakhapatnam. 2 stocks that she wants to talk about. One is Nalco, which she's holding 470 shares at a price of 176 rupees. The other one is NHPC. She is holding 920 shares at a price of 114 rupees per share. She wants to know whether she should continue to hold this or maybe look to sell at the current levels. Rajat, what's your view on this one?
Well, first of all, regarding National Aluminium, I would say that it is once again trying to get past the earlier high. Earlier high had been around, say, 119, I think it was 206.70. If it manages to get past that, then only you can expect some further upswing happening. Otherwise, if it fails to take out 200 to 206 kind of resistance zone, then you will expect that 180 will be retested. It might even fall further. So it's a choice. And over the long term, at the moment, since it is range bound for several months, it is very difficult to project the long term.
Okay, and NHPC, what's your word on NHPC? Because she's holding that also at a price of 114 rupees per share. So, Rajat, should she continue to hold this or maybe look to sell NHPC? Rajat? Okay,
Well, you can book profits in NHPC. Can you hear me?
Oh,
Hello?
yes, I can. Yes, I can hear you, Rajat.
Yeah.
Okay, book
I'm
profits in
saying that,
NHPC.
yeah, book profits in NHPC.
Okay, that's the word coming in there. But, Sharad, your word on NHPC and Nalco, anything that you're finding, and what would your suggestion be for both these?
Yeah, I think from Nalco, typically, the metal side would be a lot dependent on the type of pipes you receive from China, it being a major producer as well as a consumer of most of the commodities. But within commodities, I think aluminum might be in a better space than most other base metals. So that way, I think within base metals, this could be a better choice. But considering the type of expansion plans that they have over the next, 5-6 years, it's very aggressive, and it's a PSU that has that kind of plan in place. And recent, I believe in the next 1 quarter or so, there is one major capex that goes online on the alumina side. They have some plans on the aluminum refinery side also to increase capacities. And some mines are also expected to be operational. So all this should work out very well. But with any kind of metal, you have to be, in sync with the broader metal prices as well as the, sentiment around the numbers that the companies will report. So this company is expected to report good numbers maybe next year, expect an earnings of somewhere around 15, 16, then they might remain flat for some time. But don't expect too much of a run up in base metal prices across the board because of the overhang of China. So I think 14, 15, optimistic. We are optimistic on market probably. So maybe it does get peak multiples or somewhere around 15, 16 times. Then you could just be looking at targets of somewhere around 225 over the next 1.5 year. So you get somewhere around 225, try to exit Nalco. I think that would be fair value. Long term, yeah, certainly it's a good bet, the type of expansion they are doing once they start to show up. But I think after that, you might get a much better opportunity to enter into the stock for that kind of time frame. So it's better you book your profits around 225. For NHPC, I think it's a very good long-term idea. The operational capacities are somewhere around 8,000 megawatt. The planned capex right now that's going on is simply double of it, and another 10,000, 8,000 megawatt is on the planned stage. So I think over the long term, this could be something that could, grow at a very handsome rate, a multi-bagger kind of story. And on top of that, they're also working on, hydro solar powers where you put, solar panels on seas. I think that's a very big opportunity that can come up from India. They have initiated a tie-up in that field, and that's a very big opportunity compared to their current sizes. They have done an international tie-up, so that should help them in the long term. So I think in the long term, NHPC is a multi-bagger kind of story. Over the next 2 years, yeah, you can expect 20, 25%, 20% kind of growth at the PAT level. Considering that, I think it reports an EPS of somewhere around 6. You give it a multiple of somewhere around 20. So maybe 120, 125 if you have a shorter horizon. But if you can continue to hold, I think this is an excellent multi-bagger kind of story that might, manifold into a very handsome upside over the next 5 to 6 years.
Okay, a multi-bagger story that one could be watching out for from NHPC in the long term. That's a word coming in from Sharad. But Kranti Prasad, that's the next query. The viewer who's written to us, and this one is from Bihar. They are holding 40 shares of SBI Cards at a price of 800 rupees per share. So currently, slight bit of a loss is what they're making. Stock trading at 769. He's asking whether he should continue to stay invested in SBI Cards, or maybe look to invest his money somewhere else, book out the losses, and then invest that money somewhere else. Sharad, what's your view?
Expensive side, even if you look at the traditional price to book multiples. But I think the card business as such is very optimistic in India. SBI has handsomely grown. It is one of the few PSU banks that has been able to scale up the card business very handsomely. And in terms of that, I think they could be looking at, 20-25% kind of long-term growth. And if the market does continue to value them on the basis of, this growth and a PE multiple, then it is quite possible that, FY26, you report somewhere around 35, 40, and get a multiple of somewhere around, 30 times. So you could be looking at targets of 1,000, 1,100. So I think it's an optimistic bet. It's a bit on the expensive side. But growth rates would continue to be good. And till now, the NPA overhang has not been much. So continue to hold for targets of somewhere around 1,000 to 1,100 on the stock.
Okay, that's on SBI Cards. 1,100 is the target that Sharad has spoken about. But on that note, we're going to slip into a very short break. Don't go anywhere. After the break, we'll continue with all of your stock-related queries with our experts. Welcome back. You're watching Your Stocks on CNBC TV18, and you still have with us our experts for today, Rajat Bose as well as Sharad Avasthi, to solve all your stock-related queries. Let's quickly move on to the next query. And Rajat, this one is for you. We have Shaurya Sharma, who's from New Delhi, holding shares of Infosys. Now, they're holding it at a price of 1,500 rupees per share. 15 shares is what they're holding in terms of quantity. What is the short-term and long-term chart indicating for Infosys? Should they continue to hold this? What is the prospect of his holdings?
In the short term, it is not looking that great. It might even come down a bit, say something like, it would be, say, 1825, 1800, that might be tested in the short term. And over the long term, at least in the short to medium term, it needs to take out 1925 to about 1950. If that happens, then a new high will also happen. And if you are looking at 3 to 5 year horizon, Infosys will definitely do well. That's what I guess, because I'm quite bullish on the tech sector, both the engineering R&D as well as the normal conventional software services company.
Okay, short term not too exciting, but long term is something that is a good story there. Sharad, would you concur with that as well? Long term, yes, should the viewer continue to hold a stock?
Yeah, it can, but I think in the current valuations, what are you expecting? 10-12% kind of bottom line growth for the company. And it's already trading at what, 30 times next year forward. Not much is expected. Maybe, you have a 10% upgradation to the earnings because of not having a hard landing in the US and not a full-blown recession. So I think that could result in some, positivity. They are training around 270,000 people on the AI models, and they are working hard on integrating the AI part of it. Most of the IT companies have worked very hard on, trying to scale up the consultancy business, which erstwhile they were not very gung-ho about, or not concentrating much on that. So I think all these could yield results in the long term. But yeah, as Rajat also rightly pointed out, that maybe, medium to short term, not much left on the table. So what I'm looking at is 10-15% growth. And I think giving it a 30 kind of multiple seems a bit of a stretch. So at these valuations, I think my fair valuation comes to somewhere around 1850. So I think it's fully to fairly valued at these prices.
Okay, let's move on to the next query. This one is in Shipping Corporation of India. We have Arunachalam Balaji, who's writing to us from Tamil Nadu. He's holding 400 shares of Shipping Corporation at a price of 381 rupees per share. He's making a loss right now. And Rajat, he wants to know whether he should book his losses or continue to stay invested in this one.
This company has got only 2 shares. Even in the PSU rally, it did not quite participate, and currently it is moving sideways. Say around 230 is the 200-day exponential moving average. If it were to fall below that, then it will fall further. If you have to play ports or shipbuilding or anything, go to other stocks like, say, Cochin Shipyard or GRAC, this kind of stock, not Shipping Corporation. You are nowhere with only 2 ships.
Okay, not too interested in Shipping Corporation. Sharad, is that also something that you are looking at? Don't like Shipping Corporation too much if you want to play the story?
Yeah, I would say it's roughly fairly to fully valued at these prices. It's already trading at 16-17 times. Though the BDI is near the upper end of its range for quite some time now because of the Red Sea issues. So I think, yeah, it's at the higher end, so most probably they'll make some money out of it. They have done some tie-ups here and there with most of the PSUs. We are looking at some maybe, massive improvement on the oil discovery side. That could, give them some bit of fillip. They are the largest shipping operator in the country, and the fleet is not also very old. The average age is around 10 to 12 years, so I think that's on the aside. So consistently, I think long-term steady kind of numbers the company will report. But not a humongous kind of growth is expected, trading at already 16, 17 times. So expect market-linked returns, maybe over the next year or so, you get another 10%, so around, 300, 310. I think that's the value at which you can think of exiting. But can't look at it very optimistically as to something great is going to happen, which should result in further re-rating of the stock.
Okay, sure. Last query we have, this one is on JSW Steel. Madhav Pujari, who's writing to us from Navi Mumbai, holding 15 shares of JSW Steel at a price of 900 rupees per share, wants to know whether, what is the future prospect of our investment? Should they continue to hold this or maybe look to sell? Rajat, what's your view?
I would say definitely continue to hold it because it's a short-term trend, medium-term trend, and overall the long-term trend is all are up. There might be minor corrections that can happen. Maybe it will come down to something like a 950 or so. That can always happen. But continue to hold it. It will go. My projection is that over a period of next 12 to 15 months, it can test 1050 initially. After that, 1200 to 1250.
Okay, keep an eye out on those levels over there for JSW Steel. But that was the last query for today. So thank you so much, Rajat as well as Sharad, for joining in with us and solving the viewers' stock-related queries. And viewers, remember, you can always email us your queries on the address that will be there on the screens as well. Thank you so much for tuning into this edition of Your Stocks.